Hey everyone, Couch Investor here with another video for you today. So today, like with the cruise stocks and the casinos, I'm gonna compare the hotel stocks to my last video that I published, I think a month ago. All videos will probably pop up right here if you haven't watched that. So we're gonna go over today some stock price analysis, as you can see right here, some news articles, and then my general opinion on whether now is a better time to actually open a position in those kind of stocks. Especially now with the economy reopening, states are reopening, so maybe that might be interesting. Now, before I get started, if you haven't subscribed yet, please consider hitting that subscribe button. It really helps me out grow the channel. And if you like the videos, why not leave it a thumbs up? So without further ado, let's dive into it. Alright, so first let's compare the prices of today, the highs, and the prices back when I published my first videos. I think it was a month ago or so. So as you can see right here, Hilton was at $70.57, PK was at $7.37, Hyatt at $52.63, and Marriott at $87.11. Now, 2 weeks after I released that for those first videos, the stock went up, rallied actually. So if you bought, you could have made like quick, I think 10 to 15%, even more if you bought PK stocks. Then it went back down a bit, but now since, well, everything is reopening and so the highs aren't even that high anymore. Since then, PK and Hilton are actually higher than those short-term highs. Marriott and Hyatt are not that high as of today, but I'm pretty convinced they will surpass those short-term highs and go back above those prices in the longer term. Now, it doesn't surprise me that Hilton and PK are the ones that have gained much more than the other two, since when I covered those two stocks, in my opinion, those were the best picks. First of all, because Hilton was the most healthiest of balance sheets, and PK, well, PK is actually a real estate investment trust formed from the Hilton holding group back in 2017. Again, the videos will pop up right here. So yeah, it doesn't surprise me that those are the ones that you would have made more gains. Now, very important thing is, I know a lot of people have been asking me about PK stock. Well, they've cut their dividends. Actually, there is no dividend anymore until further notice, because, well, they will need all the cash to survive this crisis and actually maybe strengthen their balance sheet. And maybe in the long term, they might add the dividend yield back again. But as of now, there's no dividend yield for PK stock. Okay, so now let's go and look at some charts, some technical analysis, and look at some articles. Now, before I get started, technical analysis does not necessarily mean that we can predict what the stock will do in the next couple of days. Technical analysis is just only here to help us visualize how the stock has been performing and looking at the buyers and the seller side and so on. It will help us maybe to partially predict what it could be doing in the future, but it's not a magic ball like some people are saying it is. I have seen a lot of videos saying, oh, technical analysis predicts the price will go up to 100 and suddenly the price is at 50. We cannot predict that. Only buyers and sellers will predict the outcome of a stock. So let's go and look at the charts. All right, so first up, we have Hilton stock. I think by the last time I made a video, the stock was at around about here. So a couple of days later, you could have made some nice profits, but obviously then it went back down and touched the uptrend line perfectly. But now we're at the downtrend line stop. We will need to break out of this one in order to continue to go up, and then maybe touch and make some let's say some support line right around here or something like that. Let's put that in blue and maybe straighten up that line like that. So if we break out of the downtrend line and then bounce off the support here, that would be a perfect scenario. Now, obviously, there are those two circles I drew right here. Those are gaps. Now, there's a myth saying that all gaps need to be filled. Now, not necessarily. I've seen a lot of graphs where gaps were never filled. But in this case, if we do not break the downtrend line, I could see the stock go back down again and try and fill up those two gaps right here. If it doesn't, fine by me, but those are the two scenarios that could happen. Break the downtrend line and continue on and building a support, or fail to break the downtrend line and then try and filling the gaps right here. Alright, so next up is PK. This stock has a little bit more information for us. Same thing here, downtrend line, uptrend line in green, resistance in black red, support in bold blue. Now, why did I draw this support line so low? Because, well, it's actually a very solid one, and I don't think we're going to revisit that one anytime soon. Again, there's a small gap here at 773 or so. Same thing here, touched the downtrend line. If we want to go and continue to go up, we will have to beat that and build again a solid support base right around here. As you can see here, it went up for the day, went back down, up, went back down. Let's see what happens with this one. But overall, same thing, the stock price should not be down here. As you can see, it was way back up in the 20s, 30s before the whole crisis happened. Now, next up is Hyatt hotels. Everyone has a bit of the same scenario with the uptrend and downtrend line. Problem here for me is that resistance is pretty strong on this one, and again, this stock hasn't fared very well since my last video, like Hilton and PK. So for me, I hope very well that it can beat that resistance point. Otherwise, this one will also go back down, maybe not as low as my support line right here, but maybe it can create one, let's say at around $47 or so, might make more sense, as there's also a small gap right here, but as of now I'll put that right here. So same thing here, crucial point, or I could see the stock go back down at around this point right here. But with Hyatt, we can see over the long term I could see the stock go back in the 60s, maybe in the 70s, but that will take some time. As for them, their balance sheet was weaker than Hilton and PK, and especially as well as same case for Marriott, which is the next stock we're going to look at. Good thing here is that it broke up of the resistance that I drew a couple of days ago, went back, went up, touched the uptrend line perfectly, bounced off it. Now we can see a little mini uptrend right here. If it wants to continue that way, it will have to break out even more, because otherwise it will be reversed and go back down and see maybe $82, $85 in the short-term time. Should be around here, or go here, and then you could go up a bit more. If it breaks up, very well, continue, make this your support line, and then continue bouncing off that one. Now let's move on to some articles. Alright, so let's look at some of the articles real quick. Again, articles will be down in the description below. The first one is Hilton stock set to rally after profit beat, but revenue fell shy as revenue per available room dropped 23%. Obviously this was quite a while ago, but well, there hasn't really been lots of news about hotel stocks recently. Basically, they said, well, adjusted profit beat expectations, but revenue fell shy, obviously because of the COVID-19 pandemic. And actually, Hilton's first quarter results were not significantly impacted by the COVID-19 pandemic until March 2020, with occupancy roughly flat through February in the Americas and Europe, Middle East and Africa, EMEA regions. Now, like I said before, for me Hilton was the more healthy stock to buy and to own, and we can see it right here why that is. Now, next one is Park Hotel and Resorts. Obviously, same thing, article is from 2 weeks ago. but we can still learn a bit from that. Reported earnings were bad. Stock fell, as we saw on the graph before. Now, the only thing I want to mention right here is that real estate investment trusts tend to get hit the hardest and very quick before everyone else, but those are the ones that will also provide you and give you solid profits in the short term if you're an aggressive investor and you don't panic that quickly. Now, with that said, I would suggest you look into it even further. Maybe look at my previous video and look at its balance sheet to see if this could be an interesting stock for you to hold. Because a quick play now will be very difficult, as the stock is back above $10. Everything that was below $10 was a great pick for the short term, and if you're a long-term holder, perfect as well. Now, next one is my least favorite hotel stock is Hyatt Hotel. Revenues to drop to a 10-year low in 2020. It doesn't surprise me. Their balance sheets weren't that good anyways. The companies, well, if you want to go more in depth into it, the link will be down in the description below. There's one guy saying that the fair value of the share stocks is $66. It's 10% higher than what it is right now, but for me there are other stocks like Hilton or Marriott that are a better option right now. Now, first of all, Marriott is worldwide bigger. It has around about 1.4 million rooms, but it's like McDonald's, it's franchised, meaning they only own 1% of the rooms. Under a franchise arrangement, the franchisees pay Marriott an upfront fee plus an ongoing royalty based on room and food beverage revenue, which is great. As I said, there's also global presence. They have been building lots of equity this year. They've ended the first quarter with $1.8 billion in cash, up from $225 million at year's end. It did increase its debt from $10.9 billion to $12.2 billion. Marriott also used another $1.6 billion in debt and raised $920 million in cash after it amended its co-branding agreement with JP Morgan Chase and American Express. Alright, so I hope those news articles and technical analysis gave you better maybe insight about what's going on with the stocks right now. Now, in my opinion, like I said many times, if you want to buy and own a hotel stock, I would suggest to look even further into Hilton and Marriott, as for me, those are the two most stable stocks. But in my opinion, I think cruise stocks and casino stocks are likely, especially casino stocks, are likely to perform better in the short term. But in long term, I would think most of them will go back to their previous highs back in January. So that will be all for today's video. If you liked it, please leave it a thumbs up, as it really helps me out. And if you haven't subscribed yet, why not hit that subscribe button? It's free. Anyways, guys, take care, stay safe, and see you all in the next video. Bye bye.